Hello traders, welcome back to the channel. I'm Mr. OFX. If you are serious about trading gold with discipline and precision, you are in the right place. In today's video, we will break down gold for the trading week of July from 27th to 31st of July 2026, highlighting the key support and resistance levels, market structure, and the high probability trading opportunities which I'm going to be watching. Let's get straight into the charts before we waste our time. So, if you're new in this channel, kindly subscribe so you don't miss our next videos that are coming next after this. Remember also we also review prop firms in this very channel, so I wouldn't want you to miss out. All right, now this is our gold chart, and let me clean up, and we'll go back to weekly. So as you all see and aware, gold has been bearish for a very long time, and this is the liquidity that gold is all against. Now, according to SMC, we have a break of structure around here, and then we have our demand zone around here. Of course, we have also our order block, which is our extreme order block according to weekly around there, and the market is around that order block. It is still struggling. So looking at the demand, you see that the market is trading, is actually fighting from that area. So there's nothing confirmed yet if the buyers will push away the market or the sellers will push away the market. So this is something we have to find out by ourselves. Otherwise, no one is going to help us. So with this being said, we know that the market is at the support key level. However, we cannot conclude that it's going to buy or it's going to continue with the selling pressure. So I will remove everything, then I dive down to daily. Now, according to daily, we need to see a few things. First of all, we have a scenario of here, we have a break of structure to the downside, if you can see this. And then we had our extreme order block around this area here. We need to find out if the market traced to this order block. It just tapped it and then it reacted to the downside. So from there, we see that the market continued down and broke this low. After breaking this low, we see that we have our order block around here. This is a bearish order block. We can include this all. Now, if you see the market after sweeping this low or liquidity, it reacted to buyback. However, it reacted from this order block here, and the market sold back down. Now from here, the market was not able to take out this low, but after that it changed direction to from bearish to bullish. Okay, so we're going to use also the help of a trend line to see how the market is actually playing out, most of the traders. So if you look at this is a bearish trend line, and the market has been respecting this trend line for a very good time. If you see from here, it moved down again, it tapped, moved down again, it moved down. So this time around, the market moved away, and then we're seeing it coming back to trace this trend line, and then maybe move back to our POI. We are not sure. We are not sure. So what are we going to do? We are going to obey the market structure. We will not do according to what our mind is feeding us, but we are going to deal with market structure because this is what we see the market printing out. So let's continue down to H4. So I'll clean my chart a bit. All right, so if I look at this one is no longer anything good for me, but I'm seeing here as relative equal highs. So this is liquidity to me. So this is liquidity, and what do we see? We have a break of structure. Don't forget about this. We have our boss down here, and then we have our POI here. This is where the market has not yet tapped. This is unmitigated order block according to daily. Okay, so we're going to dive down to H4. So what are we seeing on H4? We want to see, is there a break of structure? Is there a change of character? Because we want to trade with the trend. The trend is our body, he is our pilot or our driver. Okay, so when I look at this, let me first remove the magnet. All right, so when I trade this, you can see that the market here has really obeyed this trend line very well. You can see this again here, again here, again here, while shifting. You see, from here we broke structure, here we broke structure, here we failed, and then what happened? We broke to the upside. So just as the market has been very obedient to this trend line while going down, I believe that the market is going to be obedient to the same trend line while going up, something like this. Okay, so we need this to happen, but we need to now identify key levels, areas of liquidity. Areas of liquidity is what we want to identify, because those areas help us with the gas to buy and sell. Okay, so this being said, I will take you back up here. Remember, this is our point of interest, if you remember this very well, and this is our extreme order block here. So the daily, you can decide to leave it the way it was, like this. Now what do you want? If the price comes back here in this same gray area, you want to see that there is a change in the market structure. For example, the market has come up here, creating for you higher highs, higher lows, higher high, higher low, higher high, higher low, higher high, higher low. You can even decide to sweep it. Now, the moment you see that there is a change in the market structure, then we can wait for a shift from, we can wait to enter from maybe a 50% Fibonacci level. Then we can start selling, expecting it to continue back down to the downside. Hope I'm clear with this. Now, this is what we can be watching for uh, from this area here, which is between 4,301 and 4,380. This is our point of interest. Okay. Now, when we look at this point of interest, also we see that the market really did something for us. Okay. You can see that the market was able to take out the previous. Let me show you this. This price was able to take out, to clear or to strip this high, which is liquidity as well. Okay, which is liquidity. So this high is liquidity, and we can trust this high because it stripped this high and gave us a very good order block here, which also has a favorable gap if you look at it. So this becomes a valid order block according to SMC. So right now we need to dive down again to a lower time frame. Let me just clean this up. We need to dive down to a lower time frame. For example, we need to go to H1 and want to identify areas of liquidity. So the market might, I cannot tell you that it is going to do this or that, but might. Okay, so let's first look at this. You see, we had a change of character around here. Then right now the market moved all the way down here and printed for us here a favorable gap where the market is reacting from right now. See that? That is where the price is reacting from, and we do not know. So when I look down here, I have relative equal lows, these lows here. So this is H4, this is H4 um, structure. Excuse me, sorry. I think okay. So we have relative equal lows here, which is also our sell side liquidity. You can also use it as a trend line like this. So this to me is a sell side liquidity. You can call it a sell side liquidity. Simple. So this is our sell side liquidity, which we need to be taken out. And then this area here can become our good zone for us to buy the market. So with this being said, we also have this what I call a liquidity block right here. So we have this liquidity block, and I trust that the moment the market takes out this low, after this low, we can buy this market. We can buy this market, but now where are you buying it to? That's very important. Now remember, we have right here, we have a change of character. You can see the market was bearish. This is a higher low, lower low. So this is our change of character around here. I also have indicator called boss and choke. This one here can also help us to identify this key level. So you can see that, okay, we have a break of structure here. So this is our change of character, then a break of structure. So this I wasn't wrong. This was very correct. So with this being in place, we now know that the market is bullish. Okay, it is bullish as of now, but we have liquidity key levels here. So what do we need? We need the market to come back here, and the moment the market returns back, I don't want you to rush and say, oh, Mr. O told us to buy the market right from here. You wait until the market gives you a reaction to buy. Okay, so the moment the market reacts like this, then that means we are bullish. We can go against these guys here, these relative equal heights. So meaning we can be looking at targeting these heights simply like this. I've already told you why I would buy here, because down here I have what we call a liquidity block, meaning this becomes our stop loss below there, and then my take profit is going to be around here. That is my take profit key level, and I would say this price is like that, and then this one is like that, then this one, this is where our maximum take profit is right there. So when we look at this, we are seeing that above us we have a fair value gap. Let me show it to you. There is a fair value gap. This is H4, don't forget. This is a fair value gap. Sorry for that. Yeah, so I was saying we have a fair value gap here. So meaning the market can react from this very FVG. So you have to be very, very careful when you're trading, and there is an institutional reference point where you are headed. So the price can decide to react from there before you know. So here we can target our uh, buy side liquidity around there, and and patiently watch. Now again, when we look at this one, we have this bearish order block. I mean, sorry, trend line. Let me remove this. Just as I said, it has been respected for a very long time until the market violated it. Then here we have a change of character. So with this being said, we have this bearish trend line which has been violated, and like I said, the market is likely to retest it, then continue to the upside. And then what I was saying, here we have liquidity key level here, and down here we have our extreme order block which caused the move to the upside. So that's the reason why I would buy this market from around this area here. Okay, I would buy this market from around there. So I'll keep this chart the way it is. Then I said to you guys, some of you misunderstand some setups. When I give you a setup like this, I don't mean that apply here your pending orders. That is not what I mean. But wait for the price to come around here. The price area is 3,994. It is between 3,994.315 and 3,958.891. That is our range. That is where we are waiting for the market to change character from. If it doesn't, there's no need for you to fight. Just give it time to sweep out all this liquidity, then do according to the market um, uh, market structure state. Okay. So we go down to H1. When we go to H1, you'll be able to see that the sell side liquidity is very, very clear. You can see it. This is what I was referring to. And also, if I look at this, maybe someone will say, I want to sell this market. So if I look at this right now, what am I seeing? I'm seeing that we have a bearish or a bullish or a bullish trend line here. You can go like this. You can see this is a bullish trend line which was violated, and the market has not yet retraced back to this. So for those ones who would like to sell this price, I could say maybe you can refer to Fibonacci around here for those ones who would like to sell it. So you can see that the 50% area or the premium zone is just connecting with your with your bullish trend line. I mean bearish trend line. You can see this. Uh, Excuse me, I don't know what's up today. This is our bullish trend line, which later got violated. If you look at this here, the price moved away from here, and then again returned to the bullish trend line and moved again. But this time around, when it came to respect it, it failed and it just disrespected. So we expect the market to reverse back to this same trend line and then sell back. Okay, and sell back to the downside. Okay, that's what I mean when I talk of this. So it's no longer bullish but bearish trend line. So what are we going to do right now? We're going to go down to, we're going to want to see also, first of all, let me return back this. Okay. So I remove this to just be sure and clean. Now, when we look at this is our 50% area, Fibonacci. So I remove this. What do you see when you look at this? We are going to apply. We've applied a line. You can see that the market here reacted. You see this? And then also here the market reacted, the market even here reacted. So we expect when the market comes back here, there's another reaction. Then from there, you can look at going back up. So On top of that, we have also an order block here, and this order block has not yet been mitigated. So there's a possibility of this price coming maybe around this order block, then buy back again, sell. So these are all probabilities. Like, you need areas where you can be able to watch the price from the key levels. Okay, so our key level where we expect to sell is that very line there. This is one, so I can say possible sales around here, because this is a Fibonacci key level. So here we can also dive down. I'll remove this. So when we dive down, you can see that this is our H1 and this is my last day time frame for analysis. Then I go back down to 5 minutes for my entries of 15. So you can see this is where possible buyers can come in. And also we have this order block here, but this order block is below the premium zone, so this is better than this. Okay, however, I'm not saying that the market is going to come back. It may come, it may not. It might just decide to drop, to continue all the way down here, but just for you to watch. Okay, so that is it, my guys. In case you have any question, feel free. So you can see that the market, surely if it comes back here, it will be able to connect with our bullish trend line, which got violated, and we expect the market to retrace, then continue down. Then from here, we are going to be watching what the market is going to do. If it buys, well and good. If it sells, well and good. So my people, that is it, and I give thanks to God so much for you, and also for the wisdom and knowledge he has given us. Okay, for the knowledge he has given us. So this is how I'm going to be watching the price tomorrow and the other days. All right, so this is my setup for you, for all of you who would like to trade with Mr. O. Thank you so much. May the Lord bless you and keep you all safe. I remain Mr. O, your mentor. Bye bye.